Very good afternoon, everyone. Charles here, FRGNT's daily chart analysis. It's approaching 2:30 local time here in Milan, and it's been quite what I would say an active day in the markets. We just closed a position long on Euro US dollar. This morning, I took an Asia range short on AUD US dollar, which I was able to go break even on after an aggressive entry. Those of you that follow the way I trade, one thing I'm always mentioning, if you're not waiting those clear structure breaks, and maybe I'll give that an illustration for you. If you're not waiting those clear structure breaks, we can see here on the 15-minute time frame, I'm drawing higher highs and higher lows on that 15-minute time frame. Once we're seeing this higher high confirmed, or the higher high made, rather created, we can then confirm this higher low in the market, meaning that we are still bullish until we break the most recent higher low, of which caused that higher high. Therefore, any short position taken based on a lower time frame intricate break of structure means that that is indeed an aggressive entry. And something that I mention always to those in FRGNT mastery, that if you are going to take an aggressive entry, you must indeed be aggressive in the way that you manage your position, because after this higher high has now been created, we don't know necessarily where that higher low will be created, of which then would look to result in a higher high. That can come anywhere. That can come once you've entered your short position in the inverse direction. Any movement away from the order block that you've seen by way of break of structure in the most intricate format, that could just be price moving away to create that higher low after the most recent higher high for the higher high continuation. So if I bring that to most recent price action this morning, as I had detailed out the structure points based on the lower time frames, and I was waiting for those structure points to have been broken for a great looking position. So what I was identifying in the market is just what I've drawn: higher highs and higher lows. And when those higher highs have been created, where was the higher low that I can say is responsible for that higher high? And as you can see, as price was moving up, I was moving my structure point up as well. Now, in my opinion, although we had a higher high here on the 1 minute break of structure, I still determined that this short position taken was an aggressive position, because in my opinion, here would have been the clear structure point, meaning that once price then come back, I'd be looking for the 1 minute order block to short from. There wasn't a 1 minute order block available up at those highs, which in a sense saved me from a re-entry loss. So I was quite lucky there, I must admit. And by the time price came back up to this area, then indeed I was taken out break even, and price continued to make that higher high, of which we would have been a concern based on what I've just drawn anyway. As we can see, we're getting to price action, higher highs and higher lows confirmed as a result of that higher high, meaning of exactly what I've just drawn. Any position taken short is an aggressive position as a result of price not breaking that most recent higher low. How this would have been a better position is if we see those lower time frame structure points being broken, but it is still an aggressive trade. But as a result of this being an Asia ranged concept, I'd be quite happy to take those positions, as you've seen I've taken anyway. And the news has just come out, and I probably shouldn't have closed my EU long. Nevertheless, it's all good stuff. Continuing back on that video now, or rather on this element, that was taken out break even. As I've mentioned, always, if you're going to not wait for those breaks of structures on the 15-minute time frame, any intricate break of structure, you must manage that position quite aggressively. And that's what I've done, and thankfully for doing so, I was taken out break even. So the position EU long that I was quite happy with, the 1 to 3 return, and getting out of that market, or getting out of that trade before the news had been released. I think that CPI coming out and being released now, of which I don't really feel the need to be a part of these days. So my suggestion would be now just to let the dust settle, let the news release settle, and then it's all fair play for trading for the rest of the day. So let's see how our higher time frame order blocks hold up in the market. I don't believe that the lower time frames, i.e. this 15-minute order blocks, is going to hold across the market, but most certainly I would expect those 4-hour order blocks to hold across the market. So I'll be looking for price to give me some breaks of structure before looking to take further positions today. So anyhow, EU long. This morning I discussed EU long, and if you were able to view my video yesterday, it wasn't my favorite yesterday. I could identify the structure in terms of no structure, pretty much. I can see that EU does have the ability to trend. Therefore, when I'm now seeing price, let's start this from here. So lower low, lower high confirmed. Here's the lower low. Alerts galore going off now, and we've had a intricate break of structure of what we could call a potential high in the market. Price come back down to the order block, creating what we could determine could well be a higher low based on the order block selection, and then we've seen that higher high take place. Then I'm looking for a price to come back down into this order block for then a higher high, higher low. Yesterday, looking at the market, I could see that price really wasn't being respected by that 4-hour 50 EMA. Price was closing above and closing below, meaning that it's not really reliable. I can't look at the EMA and say, well, right, price is respecting it to the upside or towards the downside. So that was yesterday. However, we came to the market today and there was a comparison between EU and GU and AU in terms of the higher time frame directional bias. I still have this 4-hour order block in on the charts, and I was looking to manipulate that order block to the highs if I had significant structure breaks on the lower time frame. As you can see here on the 15 top left hand chart, that's exactly what I waited for. So I wasn't really, well, not at all involved in this position at this stage. What I wanted to see was anything in the inverse direction, pretty much what I've just spoken about on AU. Happy to draw that again so we can see in terms of most recent price action we're making lower lows and lower highs on that 15-minute time frame. Therefore, what I've done in the market is said, well, here's a structure point in the market, and until that structure point is broken towards the upside, I am going to be remaining bearish. What we then have, or what we had rather, is price push up through that area, meaning that the structure point on the 50-minute time frame has now been broken, and I can then revert to trading in line with my thought process on the higher time frames, because my entry criteria is now aligned with my higher time frame directional bias, by way of which I'm expecting price to move out of this 4-hour order block towards the upside. Now, with that said, if it was a range, what I'd be looking to do is manage that position, guess where? By the 4-hour 50, or rather by the 4-hour 50 MA. Immediately, if I then am looking to take this position, I now must rely upon my confluence is by the 4-hour 50 MA, where I would still be expecting price to reject, despite what's happened recently. If I'm going to look to execute a position now, I have to respect my strategy, and that is, well, what is the first hurdle? I can see that price hasn't closed above that 4-hour 50 MA for a considerable amount of time. Therefore, my anticipation would be if price was to get to that area, I'd be looking for a rejection towards the downside. With that said, there is an order block just here that I had removed off the market, but this is really the reason why I didn't decide to hold that position back up towards what could have been just a nice, easy range position. I had ample reasoning to look to manage that position, if not close it out. So I could have managed that. Just going break even and take some funds out of that position, or I could have disregarded my strategy and gone for a 1 to 10. So I decided to be more conservative and act in line with the EMA, act in line with the order block in the opposite direction by way of 4-hour time frame, and just be happy with a 1 to 3 return on that position, which it's not bad going, we must admit. So that's really what I had taken today. AUDUSD shorts in terms of an Asia range FRGNT concept, and then I've just taken profit on an EU long, and I hope that makes sense in terms of the reasoning behind that. Just to expand on that, with what I had drawn in terms of this scenario, then ordinarily I'd be looking for price to return back to where the break of structure occurred. What we didn't really have was any 15-minute order blocks truly available. They had already been mitigated to the left-hand side. So we can see here to the left, we had price step up, but what's important to note is we had already mitigated this 15-minute order block. Therefore, what you can see underneath those 15-minute order blocks are lower time frame order blocks that are still very much so available. Therefore, it wasn't just that, okay, we've broken out of the structure, returning back to a 15-minute order block. Very consistent in my approach, whereby if the 15-minute order block has already been mitigated, i.e. already been used, I've got to do something better in terms of waiting for price action to show me that we're ready to go. So ordinarily, and in particular, what I disclosed today was if there wouldn't be any 15-minute order block available, I'd need to wait for a bullish engulfing candle. Why? Because a bullish engulfing candle in the market, or any engulfing candle on any time frame, will allow you to select an order block. So if there wouldn't be a 15-minute order block available, then what I would have done, or what I would have had to have done rather, is wait for a bullish engulfing candle. That would then allow me to use the order block left behind, i.e. the imbalance, and then I would wait for price to return back to the order block or imbalance, and I'd look for a long position. However, the more aggressive approach, because we had a 15-minute order block, it's just that it was mitigated. I went down to the lower time frames where we can see, particularly on the 5-minute order block refined within the 15 just here, that was very much so still available. And understand, look what was present because of that, or look what was left behind as a result of the order block. We had a bullish engulfing candle that took out all previous structure points to the left hand side, and then for me it's very clear to understand that the liquidity could well lie in this area. And when price returned, I did one better. I went down to the 1 minute time frame, and that's how I executed the position. In hindsight, potentially my stop loss could have been a little bit tighter in regards to something around those lines, but I figured, you know what, Euro US dollar, I have a max of between 10 to 15 pips stops on that, so therefore around about 7 pips is pretty good going, and I'd be happy to have enough range to get back up to that 4-hour 50 MA. As I mentioned, that was my target. It's all well and good in hindsight looking at where price action goes in the immediate, well, straight after your position, but nevertheless it was a good trade, if not a great trade, that has been executed on EU. So that's 10 minutes of your time. Thank you very much for your attention. I hope that these little breakdowns help you on your trading journey, and you'll hear from me shortly. There's probably no more positions for me today. That's 2 positions today. That's 1 break even, 1 take profit. And in terms of an investment standpoint, I think that's enough risk for the day, where I should be quite happy to make 3% return on all investments. And yeah, I'll be quite happy with that. Unless anything else materializes, all the very best for your trading day-to-day team. Do take care. Charles.